Morning, everybody. 8:25 a.m. Lots to go over. Hope everybody's had a good day yesterday, and hopefully a good morning today. Let's get into the watch list. So we have the VIX is up 1.17% or 1.23% as I just talked. Bonds are being bought. 30-year bonds are being bought. We have the Russell up 0.26, the Nasdaq's up 0.09, ES basically flat, up 0.04, the Dow up 0.03. Dollar's flat, Bitcoin's flat. What else? And crude is down 0.57. 10-year yield is down 1.08. All right, let's get into some top stocks here. Not much of a leader, but Apple's up 0.29, AMD up 0.27. Laggards, Snow, Baba, Tesla. Tesla is down 1.34%. This is due to some steering wheel can come off or something like that. Some kind of negative news about recalls and steering wheel. So that's not good for Tesla. And let's go to top sectors. Nothing to really note of a leader. Only laggard is Home Depot. As far as sectors, okay, I don't know why. Energy is a little leader. The only thing I could think for that a little bit, is Berkshire Hathaway just bought more Occidental Petroleum, ticker Oxy. No leaders and no laggards, probably because Powell's testifying again today at 10 a.m. in front of the House. Okay, so it's Powell again. Okay, we just had some ADP news come out, adding more jobs than thought, and we can go to that. Just give me a second. Yeah, I don't know why this website is down for some reason. I got a different source here. That's okay. Just give me 1 second. You're gonna see a blank screen for just a second. Apologize for that, guys. Give me 1 sec here. What we got today is Wednesday, and we had ADP just came out. We have Jerome Powell, 10 a.m. We have Jolts. Jolts come out at 10 a.m. Then we have crude. That's what we have for today. Tomorrow's jobless claims, and then big thing, and it's not foreign payrolls, unemployment on Friday. Let's go to talk about what happened yesterday. Let's bring it up. It's gonna bring up the daily charts. Give me 1 sec. Look at where we're at here. We're back in the middle of the muddle again. Okay, so of course yesterday with Powell's testimony and his statement, 50 rate basis hike in March is not off the table. So, and the rate now is up. I think a terminal rate is up to 5.8% or something like that. which is not good. I'm just trying to get the probabilities now. Wow. Okay. Well, let's go to that real quick. I just want to show you guys this for a sec. Give me 1 second here. You can see here now that at the next Fed meeting, there's an 80% chance we're going to get a 50 base hike. That's why the market's selling off yesterday. So that's in the cards, right? So that's not good, right? That's going to be bad for equities. Longer rate hikes than initially thought. It's not going to be a good thing for the market, right? So yesterday, of course, we had an inverted hammer, and then yesterday just solo had a lot of volatility though, because right when that statement came out, the market ripped it down. Then you had a couple rip ups, and then finally just sold off, right? And where did we go to? We went right to this 50-day moving average. We couldn't really go really below it. We closed right at it. Right now, currently we're at 398.51. We're flat basically. So we're back into this middle of this range. Right in the middle of the range. So that's the middle of the muddle. You can see, right in here, if you were just to draw like a box, I can actually draw the box here. Let's just draw a box, right? You want to talk about this range, right? We're right in the middle. That's where we closed yesterday. So now let's bring up the VWAPs. These anchored VWAPs really are like standing out here to me. It's just a little nuts. So FOMC, from the last FOMC, it's been resistance, right? This is the all-time high anchor VWAP. It's right here. It's been resistance and it's been support. And then you got the anchored VWAP from the lows here. That's been support. So this is the last leg here, this yellow anchor VWAP from the lows. Once we break that, it's obviously you're breaking the last line of defense here. So, but still, you got the 100-day moving average, 200-day moving average down here. You break that, this is just confluence, right? This is absolute. This is you can't dispute the anchor VWAP. So that's the average weighted price, right? That is not like a moving average. So that's why I like using them. So breaks this, oh man, we got a clear shot to like 377. So that's what I'm looking at. Let's look at the SPX just to get the cash market involved. Here we can see 200-day moving average here, right? So we're just back in the middle of the model, right? In futures, a little different. The moving averages are a little higher, so 50 moving averages is in the spot, and the SPX is what's causing the support yesterday, right? So it took back, this candle took back all the buying from these 2 days. So curious what happens today with his testimony. Does he take back his testimony? Does he try to roll it back? Does he try, have to really see. Okay. Let's go with the Qs. Let me look at the Qs VWAPs. I'll put them there. So the SPY's VWAPs have been more of a thing than the Qs have. So I'll be the first to admit that. But that 293.47 level could be where we end up today. That's just been a very key pivot level. Okay. Yesterday it was the 9 daily EMA, which was support. That's what that caught in the Qs. Okay, let's look at the Dow. We can get rid of these VWAPs. Okay, so that Dow came up to that point where I was like interested in a short here, but this market's not always so simple. That would have been obviously a beautiful short there, right at that bottom of this range, the 50% retracement, 61.8 retracement basically. So the Dow, is comprised of the Home Depot, United Healthcare, Goldman Sachs. So Home Depot is getting hurt. United Healthcare is down a little bit as well. So only 30 stocks drive the Dow. So let's go to the IWM. Russell's at a very key level here. You can see the range, 186.12. I have an alert set that's right at the 50-day moving average, but it's just in this range right now. If it breaks it, I'm going to look for a retest to maybe short down to the 200. We'll see. Let's look at that triple headed monster. So the 10-year yield went up to, what did we go up to yesterday? 4.0. Kind of moved back down a little bit to 3.94. Just to give everybody some perspective here, the yield curve has inverted the highest since 1981. The 2-year is up plus 5% yield. So the yield curve is so inverted right now. It's just pointing to a recession. Basically, that means people are buying long-term bonds and selling short-term, right? Which is going to drive yields up. That just means that people are expecting a recession. That's what that basically means. That's the yield curve inversion is the highest since 1981 when Paul Volcker was there. So keep an eye on these yields. Let's go over to the VIX. The VIX started to make a move yesterday, a little higher today. Now we're at that trend line. So see if we can break this. Go over 20. If we go over 20, start to move to back up into this range, could probably expect some farther down move today. Let's go to that dollar. Dollar made a big move yesterday. Look at that. Look at that candle. That just took out all of this range, and we're right up here now. So that's a big move. Probably made metals move down pretty good. So now also the euro. The euro, that's bad for the euro. Let's just look at that really quickly. It's just the biggest part of the dollar. Yeah, the euro went down, right? So let's go analyze the market of what happened. I don't want to slash there. Okay, so let's go and see what else is going on. What else is going on is CrowdStrike beat earnings. So the cybersecurity beat earnings. So CrowdStrike is right now currently up 5% pre-market. So I'm gonna have my eye on that. Like I said, Tesla had that bad news with the steering wheel. Keep my eye on that. So what else? Let's get to that market profile. Alright, we can look at what we did yesterday, because yesterday was a little crazy. So yesterday, we kind of were balancing around, right? Until 10 a.m. hit, which is 10 a.m. is the start of this candle. That's when that statement came out. We just drove lower, right? But then see, we came back up. It was wild, and then we came back down, came back up with a big, and then came. So it was not an easy market to trade, right? But we broke some key levels. Okay, most traded price of this year and of this week and of the last month, all right stacked here. We broke that, broke all of that, and we landed around the most traded price of the last year, 39.90. That's where we are. And then the 200-day moving average and 100-day movers are right below. That's why they've said the futures are different. Futures moving averages are a little different than they're not usually that disconnected, but they are right now. Okay, so that's what happened yesterday. But the move was lower, but it wasn't just like a grind lower. It was pops up. Pops up, right? So so under those big key levels. So now down here, right? So let's look at where we're at now. Most traded price of the week now has been 40.17, so that has changed, but that's lining up with the most traded price of the month and the week. So that's a big level, 40.17. Now let's look at what we're doing now. Right? Let's look at what we're doing now. All right. So we were bouncing off the 200-day moving average right here, right? But we have a week low. Okay, overnight low and yesterday's low are pretty much equivalent. So that's considered a weak low. Just because big institutions and banks just don't buy off these levels like that. Now there is a 200-day moving average here. Okay, but look at the beautiful profile today on the overnight. Look at that. That's a perfect profile. I mean, that's perfect. So that's balanced profile. Of course, Powell's testifying at 10 a.m., right? So we have to wait again to see what he says. Does he take back what he says? Does he double down on what he said, right? We all got to see. We got monthly VWAPs right here. You can notice that the overnight came up to monthly VWAP and sold off. Okay, so this is bearish right now. Right now this is bearish because we came down this whole session, built value out here in volume, but then right now these lower prices down here are being accepted by the overnight, right? Because this is the overnight high, overnight low. This is yesterday's high, yesterday's low. So market right now is accepting the lower prices. We're not going higher, but again, we have Powell. Okay, we have Powell. This is going to be, tough sledding around here because you just have, again, the most traded price of the year, of the last year. You have 200-day, the 100-day. You have a demand zone here, right? But however, what I feel is, let's look into this right now about a trade that I would be interested in, right? Because obviously Powell talking is a big catalyst. So little tiny technical analysis might get trumped from that. That always happens, right? But to have the week low here, so there's a couple things here. You have the week low lined up with the 200-day moving average, right? And then below that, you have the 100-day moving average and a demand zone. So what I would like to see is if we can break that, all this stuff, because this stuff is not going to be easy to cut through. If we can break the demand zone and we can come back and maybe test the bottom of this 100-day, well, what do we have here? Single prints. Single prints. Okay? And that if we get the right amount of volume and the right amount of weakness, we should be able to clean these single prints, right? And that level, I would say, is exactly, I just moved that, like 39.54. so, and then you got a negative epoch right here. And that just means it's a most traded price of a session that has not been touched. That's usually a good target too. So that target would be 39.47. So, but the market has to show me it can break through this. That's what I'm saying, because this is just hard. It's going to be hard to just kick through that unless Powell doubles down. We break it, and then I would look for a retest here. So that's what I would really look for. I'm not really interested in a long unless we can get above here. So anywhere below here, you have to be interested in shorts. I'm not interested in a long unless we get above these levels, the most traded price of the week, the month, and of the current year. That's we go above that again. Okay, then maybe there is a possibility we can, but stay underneath. You got to look short. All right, let's look at the Nasdaq. All right, Nasdaq, little different levels here. Okay, so what we did yesterday, a little different. Okay, so now the most traded price of the week in the Nasdaq is 12,230 right here. Most traded price of the month is 121. 121. Okay, so what's different in the ES? The ES has gone under these levels, and they're all kind of equal. The levels are all kind of equal, but in the Nasdaq they're not. So we haven't broke this 121. So what I would like to see, if I'm going to even short in the ES2, is I'd like to see this broke, because this is the most traded price of this year and of this month. Okay, so I want to see this broken. And then what do we got here? The 200-day moving average. So it's going to be tough. Today's a tough short, just because it's got to break this. Got the 100-day. I'm sorry, you got the most traded price of the last year and the month of this year. And I'm sorry, I keep babbling here. What do we have here is the most traded price of the month, the most traded price of this year, and the most traded price of a year ago. So that's a pretty big level here, that 121. Okay. But however, right underneath is the 200-day moving average. So this is tough sledding to get through. But if we do get through it, right? If you get through that, we got a little demand zone, but we got those single prints here. And I don't know. It depends on Powell, right? But Powell can double down. And if this happens and we break these levels and we hold under the 200-day moving average, this little demand zone, not sure if that's going to hold up. You're cutting through these single prints. You're cutting through them. Okay. So right now I like the ES as a better setup. I'll use the Nasdaq as a gauge to see weakness. Okay. Same thing here. We're looking at the Nasdaq's a little harder because you got a big hurdle with this. You got the 200-day demand zone. It could do it with a catalyst, but looking to target here, the bottom of the single prints. That's around 119.39. Okay. Then you have a naked VPOC, just like the ES, and that is around 119.09. But that's a big level you have to get through. Okay, you have to get a big level to get through. Now let's look at what we're doing now. Okay, so I take back what I just said. I'm sorry, because I should have went to this thing. We do have that weak low in the Nasdaq. So we do have the same weak low. So, I mean, if you want a short scalp, come down here, we probably could short there at that 121 142 level to target these levels, because this is just a monster set of levels here. Okay, and you break that, you got the 200-day. But like I said, you target the single prints, target the naked VPOC. Tough trade because of this. That level's a beast with the 200-day. So tough, very tough. And then the same thing here is, I'm not interested in any long unless we get above the most traded price of the week here. So again, underneath this, you got to be short. Only thing is, you got these huge levels below us that are just woof. I mean, that is strong, and I'll show you guys that right now with this chart. Okay, we'll just look at, it's a much cleaner look. Okay, this is the ES, so you can see now the ES as far as this chart, the most traded price of this year, you see that, the white, see this big heat map, that's from a year ago today. So 39.89, we're right here. Price, we're about to make a gigantic move here. And also notice it's the most traded price. This is what's nuts in the ES2. Look, most traded price of the year, most traded price of the year ago, most traded price of this month, most traded price of this week, most traded price of last week. Look at that. That's where we are right now. So we're gonna go boom or boom. It's queuing up. It's coiling up. We're back to balance. Okay, but usually when you break it like we just did and you go back, you expect to go to here. You expect to go back down, because we said, the market basically said, no, you can't go higher. So now you got to go back to the bottom of this range, and then you could possibly fall. We have to see though. I mean, everything's lining up bearish, but you know, this market could do whatever. Now let's look at the Nasdaq. It's probably going to look very similar, right? And it does. Just like I was saying, it's just we're such in a balance. Jeez. All right. Just a beautiful balance to show you here. Most traded price of the week, of this year. I'm sorry. Most traded price of the rolling year. Most traded price of last week, the week before. I mean, this is just a monster level. Now this is, like I said before, it's like 121. This is 120.90. It's like around 121. Okay, but just as this monster level here, we're a little above it, but it's going to be the tipping point to go here or here. And now we're waiting again. And Powell, if he doubles down, we could definitely see us break and test this support here. Okay. All right, well, that's it for me. Basically just to wait to see if Powell doubles down or he tries to walk it back a little bit. But wish everybody luck today. Give me a comment, like, or subscribe. If there's anything to note, I will update. Like, again, I'm watching CrowdStrike and Tesla. And hope everybody stays green, stay patient. This market is not easy. And I'll see you guys tomorrow.